Hey guys, let's talk about time frames and psychological levels. So the reason I'm doing another video on psychological levels is because I had a comment and I had somebody asking me how to plot these psychological levels on an hourly time frame. So this person uses the hourly time frame as the biggest time frame or the highest time frame, and then he scales down to say the 5-minute time frame to get entries on. So now the question of what's the best time frame to plot your psychological levels on? How do you plot these levels on different time frames? This shouldn't be a problem if you understand the underlying concept behind psychological levels and time frames. So the most important thing is not how you plot these levels on different time frames. It's not how to get the best time frames to plot the levels on, but the most important thing is the underlying concept behind the psychological level stuff. And if you understand the concept behind it, if you understand the principles behind it, picking the best time frame to plot the levels on or plotting these levels on different time frames becomes very easy. So what I'm going to do, I'll give you a simple explanation, I'll give you a scenario, and if you can understand this, and then plotting these levels and picking the best time frames to use these levels on becomes as easy as, like, say 2 minutes. You can literally pick any chart and look at it, and within 2 minutes you're done. So the comment thing that came in, this guy was asking me to do it on GJ. GBP JPY is a pair I really don't trade. I don't trade GBP JPY, but if you have the knowledge, if you understand the principle, you can apply it on any time frame. You can apply it on any pair. It could be currencies, indices, crypto. The problem is the concept. If you understand the concept, it becomes very easy. So I'm going to do this explanation thing right here. So let's look at the chart and I'll do the explanation right here. So all right, cool. So everything works. So the first thing is, I'm going to clean this. So the first thing is, let me hide this one first. Let me hide this candlesticks and we'll do the explanation. So I want you to look at 3 different persons. So let's say 3 business people, for example, and I'm going to show you how this relates to traders. So let's say you have, this is a business person A, you have B, and you have C. So business person A, B, and C, these are all people operating at different business levels of capacities, and the main difference here is just the buying power. So let's say this person has to do transactions and he has a buying power of, say, let's say $1,000. Yeah, let's say $1,000, and this person has a buying power of, say, $10,000. So we'll put $10,000 here, and person number C has a buying power of, say, $100,000. So when you look at these 3 persons, what differentiates them is the buying power. So when this guy, let's say these guys all obtain products from, say, a vendor right here. So let's say we have this person here, this distributor, and he has to distribute to these 3 persons. So you have person A contacts the distributor, person B contacts the distributor, and person C contacts the same distributor as well. So you have 3 persons doing business, but they're all operating at different levels. So when this guy communicates with the distributor, every transaction thing he does is around $1,000. So he has a buying power of $1,000. This guy has a buying power of $10,000. This guy has a buying power of, say, $100,000. So if things are going on really good for this guy, so business person number C, he is going to do his transactions at $100,000. So right around there, so you might see $100,000. You see the next $200,000. So you see how, like, the level he's operating on is quite different. The buying power is different. The buying power is $100,000. So remember, the focus here is the buying power. So he has a buying power of $100,000. So he can do transactions at $200,000, $300,000, $400,000, $500,000. Person number B, or business person number B, when he communicates with the distributor, he has a buying power of $10,000. So he can do transactions at, say, $10,000. he can do transactions at $20,000, and he can do transactions at say $30,000. Now, when you look at business person number A, this is the smallest of them all, so he is operating at the smaller scale. So he has a buying power of $1,000, so he can do transactions at say $1,000. When he communicates with the distributor, say things are going on well, he can do $2,000. Later on, he can do $3,000 and stuff like that. So these fluctuations in the prices that they're doing the transaction just comes with the buying power. So the buying power here is 1,000, this guy 10,000, and this guy 100,000. So with these three business people, they're operating at different scales. So business person number C, when he is balancing his books with a distributor, you never hear him talking about transactions of 3,000, 2,000 or $1,000. He talks about 100,000, 200,000, 300,000. Now business person number B, when he communicates with the distributor, he never talks about transactions in hundreds of thousands, because that's not his capacity. He's not operating at that level yet. So he's operating at 10,000, 20,000 and 30,000. And worst case, like you see business person number A, when he communicates with the distributor, he never talks about transactions in say 100,000, 200,000, 300,000, or he doesn't even talk about 30,000, 20,000, 10,000, because he has a buying power of say $1,000. So he is operating at this scale. Person number B operates at this scale, and person number C operates at this scale. Now let's look at the scenario where you have to bring in traders. So you have, let's look at three traders. You have scalpers. So I'm going to put a scalper here. We'll put scalpers. I'm going to put, so let's put SC. So SC stands for scalpers. And then we have swing traders. I'm going to put SW here. You have swing traders. And then I'm going to put P. You have position traders. So you have three different traders now. So you have a scalper, you have a swing trader, and you have a position trader. So with position traders, now the difference with these business people here, we were looking at the buying power, $1,000, $20,000, $100,000. If you have to do the same thing, so just flip the page and now look at these business people as traders. So if you have a trader here who is a position trader, this guy operates at a different scale. So he's looking at trades that go for say weeks to months and even to a year. So he can hold trades from a week to a year. Now with swing traders, these guys are holding trades from say hours to a couple of days, or let's say days to weeks. So I'm just going to put days. So he's let's say this guy had to do like all the way to the yearly. So these guys are holding trades for days. So he's holding trades for days. Now when you look at scalpers, these guys, they'll hold trades for say minutes, couple of minutes to maybe hours, and then maximum a day, so a day or two. So that's the max these guys can hold the trades for. So scalpers want to go in and they want to go out, so they're holding these trades for a couple of minutes to hours and maximum a day. So it's really difficult for you to see scalpers holding trades for more than a day. So it's always minutes to hours. So let's say minutes to hours. Now swing traders are taking these trades for days. Position traders are holding it from weeks, months to even a year. Now it's very easy for you to see banks. So banks are operating at this level. So banks are mostly position traders. So when you see banks and you see them talking about so they come and then they have a meeting and then they're looking at the 6 months growth, they're looking at 3 months growth, or they're looking at a yearly growth, and that's because they're operating at this level as a position trader. Now as a swing trader, you're looking at days, so you're holding your trades from say 3 days to maybe 7 days and you're good. So the difference between a position trader, a swing trader, and a scalper is not in terms of the buying power, but what differentiates these guys is time. So time here is a main factor when it comes to traders. So you look at a swing trader, you look at a scalper, time is the most important thing. So when I talk about the time, it's like the time you take in holding the trade from execution to actually exiting the position. When it comes to these business people, the buying power The buying power is the most important thing, and that's why they're operating at different scales. So the buying power is a different thing. This guy 20,000, this guy 100,000, and then this guy right here is 1,000. When you look at scalpers, swing traders and position traders, the difference is the time. And the reason I say the difference is the time is because you can have somebody who is scalping and he is opening trades at bigger lot sizes compared to somebody who is even swing trading or a position trader. So these things happen. So you can see a scalper going in with say 100 lots while you have a swing trader just doing 1 lot. So again, the difference is not the difference is not the buying power, because banks, swing traders and scalpers, they'll have different buying powers and different capital allocations, but the problem is the time. So if you have this understanding, a swing trader cannot operate on these time frames. The swing trader cannot hold trades for say months to years. It's very difficult. I swing trade and it's difficult for me. I haven't held a trade for say 2 months, but I'm swing trading. I haven't held a trade for 3 months. It's quite difficult. Now for a scalper, it's very difficult for you to see somebody scalping and holding trades for say 3 to 7 days. And when you look at position traders like banks, it's difficult for you to see banks open and close positions within a minute or 2. So time is the most important thing when you're looking at these different traders. And if you look at business people, just to make the comparison, the buying power is what differentiates these guys. So if you have this understanding of the buying power and the timing, then you can use this same principle to understand the best time frames to plot your psychological levels on. Because these psychological levels, once you plot these levels, it gives you, let's say, it gives you an interval to work with. So a position trader has an interval he's playing with, and this interval is not an interval, let's say, a scalper or a swing trader can play within. So I'm going to take this off, and then let's do some analysis. So let's bring the chart in. So let's look at this pair. So this is pound JPY, and for the person who asked me the question, how do you plot these levels on the hourly time frame to get your directional bias because he trades on the 5-minute time frame, understand the thing I showed you before. So position traders, swing traders, scalpers, and all of that beautiful stuff that I showed you, like the little thing I just did, keep that picture in mind, and then let's do the same thing here. So before we step down to lower time frames where you're scalping, let's start with say position traders. So let's look at this from say the monthly time frame. So this right now is on the daily. So if I look at GBP JPY on the monthly time frame, so this is the monthly time frame, and this is all I see in terms of price action. So let's see if I can put one psychological level. All right, so I'll put this psychological level right here, and we can play with this now. So for somebody who, like the banks and these institutions, these guys are looking at movements from say a week to a month and even to a year. So they're looking at a couple of months in. So the business guys were operating at levels of 100,000, 200,000, 300,000 and stuff like that. So position traders as well will operate at those levels. So when you look at these psychological levels, it's just representing price increments. So for example, remember business person number C. So we had business person number C, and this guy was operating at say hundreds of thousands. So if you bring this person in as a position trader, the levels they're looking at as well has to be higher levels. So they're looking at maybe 100K, the next level has to be 200K, the next level has to be 300K. So it's just the same thing. The difference is here I was talking about a business person, and here I was talking about a position trader. So now let's use this. So let's plot the first level for these guys. So banks and institutions, these are the levels they're looking at. So this is GG on the monthly time frame. So let me put this first one. So we're close to 200. So this should be like 200K. So 200. So I have 200 right here. So if you look here on this side, that's 200,000. So remember, the buying power is 100,000 for person number C, and this equates to position traders. So if you have 100,000, and if I'm going lower, so the increment is 100K. So the next level that we have to plot, I will use, say, let's do if he's using that, let's do 100k, 150. Okay, so let me put this. So I'll put the next one. So let me put 100 and see. All right, cool. So I have 100k, I have 200k. I'll put another cycle level. Let's say 200. Put the next cycle level. So here I'll do 150k. All right, cool. So these are the levels I'll use on the monthly time frame. So these are the levels I'll use on the monthly time frame. So I have 100k right here. So I have 100k. I have 100k, 150, and 200. So when you look at this, this is equally distributed. So here, the difference from here to here is 50k. The difference from here to here is 50k. So these guys are operating at levels of 50k increments. So these guys, when looking at the monthly chart, they're looking at movements from say 150 to 200,000. So any level within this area is not of interest to these guys. They really don't care, because the focus is take this price from 150, take it all the way to 200k. That's the most important thing. So let's do this real quick. Now you have this levels plot on the monthly time frame. If you do this, just look at this movement. It takes 912 days for this movement to occur, and that's a lot. So if you look at this movement here, you're looking at 94 days. You look at this movement, you're looking at 112 days. So if you keep playing this and just going back in time, so I'm going to put one level above this. So if that was 200, I'll do 250. I'll do 250. Cool. So if you look at this movement from here to here, that's 669 days. And that's why I keep telling people, it's very okay for you to look at different time frames, but you need to understand when you're doing your top-down analysis and stuff, you can, if you're scalping, you can look at this range to play with. So this range from 200 to 250, this is not the range for you to play with, because you can't even hold this trade for this long. This is 669 days. This is 821 days. This is 912 days. For position traders, for banks and institutions, this is very easy. They can hold these positions for this long. So it's very easy for them to do stuff like this. So I'm going to take this out, and these are the levels you use on the monthly time frame. So I'm going to pin these ones. All right, just pin. I'll make sure it stays only on the monthly time frame. And let's get now the daily time frame. So let's do this and then put this on the daily time frame. Take it off the monthly. So let's step down to the daily. Now on the daily time frame, if you had to do the same thing again, remember the explanation we did before. You had business person number B. So this is a swing trader now. For this example, these guys are operating at say 10,000 or 10k. So you have swing traders here. So these guys will operate at this level. So if the buying power here was 10,000, the next is like 20k, the next is like 30k. So it's the same thing. If you're swing trading, you're looking at levels like 10k, you're looking at levels like 20k, you're looking at levels like 30k. So it's the same thing. So if I had to plot these levels on in the daily time frame, so I swing trade, so the daily time frame is always the biggest time frame for me, and that's how I plot this level. So let's use something like this. Let's start, let's say 180. So if I do 180, I just want to cover this distance. So we do the next one and do 190 like this. Okay. Hold on a second. I should paste this. Okay. Let's do 190. All right. So this is the second level. I can do the third one and do that's 90. So I'll do 200. And I can go above this. So let's go below because we have a lot of price action to the downside. So I'll do 180, 170, 170. I'll do maybe one more. I'll do 160. I'll do 160. All right. So these are the levels you'd use if I was trading GJ. These are the levels I'll use if I was swing trading. So on a daily time frame. So if you look at the difference here. So you look at the difference from this level to this level. The difference is say 10k. The difference from this level to this level is 10k. So the price increment here is 180, 190, 200. So the difference is like 10k. You look at this to this, the difference is 10k as well. And remember, on the monthly time frame, the difference was 50k. So those were the increments, or those were the ranges I was looking at on the monthly time frame. And on the daily time frame, which is the highest time frame I look at when I'm swing trading, I'm doing 10k, 10k, 10k like this. So these are the levels I'll use if I was swing trading on this time frame. So let's change the color, because I'm going to show you something in a bit. So let's keep this one, let's change it to this color. Put this. I'll show you something real quick. Oh, sorry, I'm using this. Switch this as well to this, and switch this to this color. Perfect. So I want this to remain on the daily time frame. Now, for the person who asked me, he uses the hourly time frame as his biggest time frame to get the direction and everything. So if I do this, we'll step down to the hourly. So I want this on the hourly time frame. Cool. So let's step down to the hourly time frame and let's see. So let's see. All right, that's the level right here. So I can use, say, let's do 190. Let's put a 190. We'll change this color as well. I'll use black for this level. So good. So at this area, so if I have 190 here, so this guy is operating at, say, the hourly time frame, and he has to step down to the 5-minute time frame to play. So if the hourly time frame is your biggest time frame, so I'll do 190, 190 right here. So the next level for me will probably be something like, let's say 192, 500. So you see the difference here. So I do 192, 500. I do the next one, I put 195, 195 right here. So you can go lower as well. So I can do 187, 500, 187, 500, 187, 500. So when you look at the difference here, the difference, so you look at the difference here. So the difference from here to here, it's like 2,500, 2,500. The difference from here to here is 2,500, and the difference from here to here is 2,500. Now, so you're operating at different scales. So remember, what differentiates the scalper, the swing trader, and the position trader is just the time it takes to travel from one level to the next. So if you look at this guy is operating at a different scale. So you're looking at 1 day, 12 hours. You look at this movement right here. You look at 3 days, 23 hours. You look at this movement, 1 day. You look at this movement here, 21 hours, less than a day. You look at this, 14 hours. You look at this from here to here, 9 hours. So if you're operating on this time frame, you can tell already 1 day, 12 hours, 15 hours, 9 hours, 21 hours, 3 days, 23 hours, 1 day. So at this level here, for somebody who is scalping, remember what differentiates a scalper, swing trader, and a position trader is just the time it takes for you to execute your trade, go in and go out. So this guy, he's operating at this level. You look, 3 days, 23 hours, and you probably don't have to hold these trades for like a day and 12 hours, because if he's trading on the Tokyo session, as he mentioned, when you come in the market, maybe the age, like let's say the New York session had played out already, and at this point price is somewhere here, let's say for example, and this is the open of the Asian session. So you might capitalize on this move to an area like this and you out, or you trade it from here to here. You see, so this might be the move you intend to capture, and it's very small compared to like the entire move, but you understand the range you're playing in and you understand this level. So you're not looking at, say, the levels we're looking at on the monthly time frame, 100 to 150 or 150 to 200. You're not looking at those levels. A scalper is not looking at the levels like, say, 190 to 180, because the range is too big for you to operate on that scale. So once you have this sorted out, it becomes very easy. So now I'm going to take this stuff out and I'll show you something else just to make it really easy for you. So the time is very important, guys. The time is very important. So let's say we step back on the monthly time frame. So on the monthly time frame, so you look at the levels we have on the monthly time frame. I want to make this really clear for you to understand. So remember, you had 3 persons. You had A, you had B, you had C. This guy was operating at say 1,000. The buying power was 1,000. This guy was 10k, and this guy was 100k. So if you had traders to mimic the same thing, you had scalpers. So our scalper here is operating at say the same level, 2,500, and this guy is operating at say 10k, and this guy here, so the swing trader is operating at 10k, and the position trader is operating at say 50k. Sorry, he's operating at 50k. So he is operating at 50k. And that's the distance, or that's the difference from this cycle level to the next cycle level. So once you have this understanding, if we step down to say, let's bring in the levels here. So you have 150 all the way to 200. So we should have psychological levels on lower time frames that appear within this area. So there is something I want to point your attention to. I'll step down to the daily 150 to 200. I hope I have levels within that. So I have levels of 150 to 200. So if I take these levels, for example, and I put these levels on, I want these levels visible on the monthly time frame. So for example, these daily levels, make them visible on the monthly time frame, and I'll show you what this looks like. So if we step back to the monthly time frame, so the monthly guys, these guys were looking at the movement from here, from 150 all the way to 200k. So this is what I'm trying to draw your attention to. As price is reacting, as price is moving to the upside like this for these position traders, the levels within this area is not of interest to them, because they have a goal, they have a target. So the target is to move prices from 150 to 200,000. So all these levels that exist within this area all the way to 200 is not of importance to them, because it doesn't, like this movement from here to here, let me make it clean. So the movement from here to here, these guys are really not interested. This is the move they're looking at, like this. So this movement here, like once price is consolidating here, these guys don't care. It doesn't impact them a lot. So they're like, all right, cool, you're consolidating, you're doing these things, but this is the move I'm looking at. So price gets to this point and they've covered this distance already. So they're just operating at a different scale, and that's what I'm trying to make you understand. And if I can, let me say, let's put in, say, let me take these ones out and take this one out, and I'll bring in the levels from the scalpers and put them on this chart as well. So 150 to 200. Let's step down to the hourly. So if we bring in these hourly levels, these ones, so put this on the monthly, and I'll show you how it looks insignificant. It's not significant on the monthly time frame. So put this on the monthly, so 1 month. So these are the levels. So what you're looking at right here, so you have these guys here, position traders, banks and everything. They're looking at price movement from 150 all the way to 200,000. So the levels you have on the hourly time frame, you have a lot to play with, but these levels are kind of insignificant on this time frame. So the question of what's the best time frame for you to plot your levels on, it has to depend on what type of trader you are and how long you're willing to hold your positions for. So if you're a scalper, then you should pick a time frame, like the highest time frame you pick should be in respect to how long you can hold a trade. So if you're scalping and you step down to the hourly time frame as your highest time frame, this is what you're looking at, because you can comfortably hold these trades for a couple of hours. You can hold these trades for hours and you're done with. You can hold these trades for hours and you're done with. So pick your highest time frame, and as you scale down to lower time frames, so I'm going to do this. So if you're scalping and you take your trades on the 5-minute time frame, let's put this so it goes all the way down to the 5-minute time frame. So I'll put this, and I'll put this, and I'll put this. So let's take it all the way down. I'm trying so this video cannot be too long, so let's look at the 5-minute time frame. So if you're scalping, this is what you're looking at. You're looking at movements like this. This is what you're looking at. So you're going in and you're coming out. So you're not in this trades for too long. This takes 8 hours for price to move from here, for price to move from this point to this point. It takes 8 hours, and you're done and over with your trade. You're in and you're out. So the question again, guys, the question of what's the best time frame for you to plot your levels on? This depends on what kind of trader you are. So always remember, guys, I've given you a simple analogy. I'll put this on the monthly. I've given you a simple analogy. Look at this thing as different traders and look at it as different business people. So once again, you have business person A, you have B, and you have C. These guys operate at different levels. The buying power of this guy is $1,000. The buying power here is 10K. The buying power here is 100K. If you had to look at traders, for example, you have a scalper. He's scalping and he's looking at, say, increments of, say, 1,000. So his first level is going to be 1,000. The next level is going to be 2,000. The next level is going to be 3,000. And for the guy with swing trading, he's looking at a different level. He's looking at 10,000. The next level, the next psychological level is going to be 20,000. The next level is going to be 30,000. Now, for somebody like a position trader, banks and institutions and stuff like that, these guys are looking at 100K. The next level for them has to be 200,000. And the next level has to be 300,000. So what's the best time frame for you to plot your levels on? The answer comes from what kind of trader are you. If you're a position trader, your best time frame cannot be the daily time frame, because if you use the daily time frame, these are the levels you're looking at on the daily time frame. Now if you're a scalper, you cannot use the daily time frame to pick these levels from, because if you pick these levels from the daily time frame, you're looking at very massive moves. You can't even hold this trades because it's taking days for it to complete. If you're a scalper as well, you can be looking at the monthly time frame as the best time frame for you to plot your levels on, because you can't hold this trade from 100 to 200. That level, that interval is too big, it's too massive for you to operate at. So the best time frame comes from the type of trader you are. If you're a scalper, you're operating on lower time frames. Pick that time frame, that's your highest time frame, and you operate on that time frame. So if you're scalping, you step down to the hourly time frame. These are the levels you're looking at. So every level that comes in, let's say 87,500, you're looking at 87,500, you're looking at 190, 192, 500, 195. These are the levels you stick with. As you step down to lower time frame, so let's say you step down to like the 30 minutes, it's the same. You're looking at the same levels, you're not changing it, and you understand there's a possibility of other levels to fall in within this area. It's not of concern to you because you've taken this from your highest time frame and you play as you go down to lower time frames. So let me do something like this. If you are scalping, this will be your highest time frame, the hourly. So I always look at 4 time frames. So I'm looking at the hourly. I'll probably look at, say, 30 minutes on this time frame. Here I'll look at 15. I'll look at a 15-minute time frame, and here I'll probably look at a 5-minute time frame for my entry. So this is what I'm looking at. So on this time frame here, on the hourly, I'm looking for my direction, I'm looking for the overall movement, I'm trying to understand what price is doing as it's moving from one side level to the next. As I step down to lower time frames, I'm just looking at the movement within. I'm trying to understand what's happening. And once you step down to like the 5 minute, you get your entries, you start scaling in as price is moving to the next psychological level. So this is how I'll look at it. If I was doing, let's say, swing trading on this pair, my first level has to be like the daily. So I'll look at the daily time frame. So if this is the daily, and then I want this to appear on the hourly as well, all the way to that flat. So I'll look at the 8-hour time frame. I will look at the 8 hours. I don't want this on the hourly. Look at this. I'll take this out. Take this out. Take this out. Give me a second, guys. So I'll look at this. This is the 8-hour time frame. So this is the 8-hour time frame. So I'll put this on the 8-hour time frame as well. Take it from this 8 hours. So sorry, I'll put this on the daily. So I'll start on the daily, 8 hours. Daily to the 8 hours as well. So here I'm gonna have the 4-hour time frame, and here I'll have the hourly time frame for my entries. So this is it right here. So this is it. So this is what I'm looking at. Something like this, something like this. So if I'm swing trading, I'm looking at 180. So you see, I have 180, 190, 200 is the same level as I step down to the 8-hour time frame. Same levels 4-hour time frame. Same levels on the hourly time frames. Now the difference is how I look at price. I look at price interaction within this time frame. So all I have to do, I pick my direction on the daily time frame. I have this directional bias on the daily time frame. As I move to this time frame, I start looking at the intricacies of it, like the details of everything, like the details of like the price action within, the details of it and everything. I step down to this one, I look at the details, I come here, I look for those entries. So that's how I look at it. And if I was doing, let's say, if I'm a position trader and I'm looking at, say, the monthly, so the highest time frame for me will be the monthly here. So I want this to fall maybe to the daily and the weekly. So I'll do monthly, weekly, daily. Yeah, let's say monthly, weekly, daily. So let's do this monthly. If I put here 1 day, so let's put here the daily. So I'll take these levels out real quick so I can bring in the monthly levels. All right, cool. So monthly, I want this on the daily. Let's see. All right, that's the first level up there. So the daily is going to be for my entries. So I should put the daily here. So the daily is going to be for entries. So I have the daily here. So I should put the weekly over here. So I have the weekly. I want this on the weekly as well. I want this on the weekly time frame, like this. And let's see, so I have 1 month, I have the weekly, and let's say if I do the daily here on this one, so I can do the daily time frame here and maybe the 4-hour time frame for my entries. So I'll probably look at the 4 hours for the entry. So this is how I look at it. So there's not enough time for me to put these levels on all those other time frames, but basically that's how I look at it. So the best time frame for you to plot your levels on, it depends on what type of trader you are and how you plot these levels on different time frames. Guys, just remember, how you plot these levels on different time frames, it depends on what type of trader you are. If you're a scalper, use the hourly 4 hours, look at those levels, look at the interval, ask yourself, how long is price going to take to travel from one level to another? Is that an interval you're comfortable working with? And if you accept, if you agree, then you use those levels, you scale down to lower time frames up until the point where you get your entries. It's the same thing if you're swing trading, it's the same thing if you're like a position trader. So I hope this makes it very easy for you, and I hope for the person who asked the question, this brings a lot of clarification and clarity for you. And again, guys, if you have any questions, just drop it down in the comment section. I'll look at it. If it needs me to do a video, I'll do. If I can reply quickly, I'll just give you a quick reply. And I hope you found this interesting, guys. So that's it. And remember, guys, stay patient and be consistent with everything you do. And until the next time, if you found this interesting, don't forget, hit that like and subscribe button. See you during the next one. Bye for now.